Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Let's take a look again on the gold market. So gold market, as you can see, mostly moves in the same direction as the major currencies, because the driving factor for all this stuff is strength of the United States dollar. As you know, the inflation expectations have increased in the United States, and yields of the treasury bonds, especially on the 10-year bond, has reached the 33%. So this is a very important psychological level, and because, as you know, the 10-year bond is the benchmark for a lot of different bank products, such as mortgage loans and others. So it's really a very important indicator of the inflation. Implied inflation also stands about the 2% right now in the United States. And as geopolitical tensions take the back seat, so these financial reasons have come on the fourth stage, and that press on the gold market and other currencies as well. As a result, gold has destroyed the short-term bullish stop that was forming here. If you remember last week, we have talked about the bullish grabbers that have been formed here and here, and we said market should show just minor retracement here to complete upper target and to show the breakout of this pattern, but this hasn't happened. So previously we even have talked about the reverse head and shoulders on the intraday chart. So market was not able to continue to move higher, and mostly it has shown the signs of the failure to proceed to the high targets. As a result, starts dropping. Right now, so currently downside action stopped by, you can see, oversold conditions. So market here we do not have any major fib levels. It's just market has reached the daily oversold, but taking into consideration the whole construction that we have, it's very logical to see the price somewhere around this support area. So it was previously the support, kind of the double top is forming, so around the neckline will be probably the support, so which also stands close to our confidence support. So the 1310, 1311 here as lows was around 1302 area. So that's the area where market could appear in the nearest future. So approximately the same area, the same scenario we see across the board on the euro currency, on the Great British pound. So currently, I think that probably could become the temporal stop. And here, yes, we could see some minor bounce, just the technical respect of the oversold conditions, some intraday patterns. But this recent drop was rather strong, and also we need to take into consideration that market in fact has failed to break this area, to break this triangle. That was the bullish trap by the classical technical analysis, to fail or breakout. And usually when failure breakout forms, the chances on the real breakout in the opposite direction increase significantly. That's why in the first stage of this, market probably could reach this previous support within the few sessions. So speaking on the today's session, what we could keep an eye on the follow time frame chart, guys, as you can see, market has completed AB equals CD pattern. As you can see, our regardless equal to sell have appeared to be the decisive pattern in the last week. Here is most interesting, this most recent thrust down. So very good thrust. Keep an eye on the possible technical, some tactical setups. For example, double repo buy pattern that could trigger upward retracement, or maybe brand body sale will be forming. So just watch for short-term stops that will let you to trade on intraday charts with very fast patterns, very fast trading setups. Don't marry any position currently, because in current circumstances, guys, it's not really a good idea to keep longs for a long period. Because overall technical situation mostly stands bearish. At the same time, when the market stands at the oversold, it's not quite comfortable to take the short position because you need some pullback. That's why it's better to focus on some short-term stops on intraday charts and trade them, and then watch for bigger picture what we have on a daily, approximately the same scenario we have on the euro currency. Also, this drop takes the shape of the guarded steeple to buy. We have talked about it last week. We said if market will fail to reestablish upward direction here immediately with the completion of this ABCD pattern, it probably will drop to the 1319 area. And indeed, this has happened. You can see market has completed this AB equals CD, and we've got this guarded steeple to buy pattern. It means that some at least 3-8 retracement probably could happen here, because market right now at oversold, market has completed AB equals CD target, and some retracement maybe to the 1335 area. This really could happen. At least 3-8% bounce should happen, maybe even slightly higher. So keep an eye on the short-term steps, and let's see what will happen when market will reach the major support area. This will be important.